If you've ever been denied for funding, you know how frustrating it is, especially when banks won't even tell you why. Here's the truth. Most business owners get denied because of avoidable mistakes. And if you're planning to apply soon, pay close attention, because what I'm about to share could be the difference between you getting 50,000 plus in funding or getting nothing at all. By the end of this video, you'll know exactly what banks look for and how to set yourself up for easy approval. So with that being said, let's get into it. So the first and most common mistake that I see is that people will go to the bank to get business funding and their personal credit just is not ready yet. And so you might think, I have a good credit score, so I'll definitely get approved. But that's actually wrong. That's not how the banks work, and that's not what they're looking at. Your credit score is just one piece of the puzzle, but what really matters is your entire credit profile. First thing is that when it comes to your payment history, that makes up over 35% of your entire credit score. And so if you have one late payment, that's an instant red flag for the bank. Number two is your credit utilization. This makes up 30% of your overall credit score. And so if you're applying for funding and your credit cards are already maxed out on the personal side, banks assume that you're desperate for money, and so they will not lend to you. And number three is credit mix and credit age. And so on your credit report, if you only have one account open or less than 5, banks won't trust you yet. And so when it comes to the solution, how do we fix this? The first thing is always pay on time, no exceptions. And if your credit needs to be fixed, get that done first. So it doesn't matter if you have late payments, collections, charge-offs, even a bankruptcy or a repo. Anything on the credit report can be removed. But I highly recommend before you do anything, get that fixed first. Number two is keep your credit card balances under 10% utilization. And so when banks are looking at your overall credit report, they're not just looking at your average utilization. They want to look at the utilization of each individual account. So if your overall utilization, let's just say, is 10%, but two of your cards are maxed out, that's a red flag to the bank. So make sure each individual account is 10% or less when it comes to the utilization of that account. And so anytime your credit score is below a 700, it's either something wrong with your payment history or something wrong with your utilization. So the first thing you should always check for are late payments and high balances on your cards. 9 times out of 10, those are usually the problem. And so if you don't fix this stuff first, banks won't even consider your application. And so now that we got that out the way, the second most common mistake that I see is people going for funding when they've had bad history with a bank in the past. And so most people don't realize this, but banks actually have a pretty long memory. So if you ever had negative bank account balances, late payments, account overdrafts, or even fraud alerts, the bank definitely still remembers. And even if it was years ago, they can still get you denied. And so what's the solution? And so if you had issues with a bank in the past, I highly recommend don't apply for funding there. There's over 4,000 banks here in the US that you can go to apply for business funding. And so 1 or 2 relationships that may have been ruined in the past, that's not that big of a deal. And so I highly recommend starting with a bank that you've never had issues with in the past. Third most common mistake is that I see so many business owners applying for the wrong type of funding based on what stage they're at in their business. And so when it comes to funding, not all funding is the same. And so if you apply for the wrong type of business funding, you'll either get denied or you get lower limits. And it doesn't even matter if your credit is perfect. So here's what you need to know. Business credit cards are the best for new businesses. They're the easiest to get approved for, and there's no tax returns or financial documents required to get the approvals. Now, when it comes to business loans, these ideally are not for new businesses. Banks ideally want to see at least 3 years of financials before they approve these, especially if it's a larger loan amount. And then the third most common type of business funding is business lines of credit. And business lines of credit are mainly for businesses who already have 2+ years of business tax returns. And so what's the solution? I just want to let you guys know that these 3 types of funding that I just talked about are just the tip of the iceberg when it comes to funding your business. These are all great options if you're still within the very early years of your business. But there are over 100 ways that you can actually secure funding for your business at a much higher level. But I'll get into that in another video. And so if you are a new business, do not apply for business loans. And when I say new business, I'm talking about a business that's younger than 2 years. I always recommend starting out with personally guaranteed business credit cards first, because you will get much higher limits. And then you just build it up from there. And so after watching this video, be sure to check out the one in the description below, where I break down how you can get your own custom tailored business funding plan that outlines exactly what you need to do in order to get the funding that you need. These consultations are completely free. The fourth most common mistake that I see is that your business is not set up in the right way. And so even if your credit is perfect, banks will still deny you if your business structure raises red flags. So the first most common mistake is that your business is set up in a risky industry. So that could be real estate, it could be trucking, it could be construction, it could be owning a restaurant. Banks don't like these because they're high risk. Number two, maybe your business has a high risk business name. And so if your business name sounds anything like real estate, trucking, restaurants, or includes any of the risky industries within the name, the banks are gonna flag it as well. And the third most common mistake is having a PO box or a UPS store for your business address. And so banks hate these as business addresses. And so what's the solution? The first thing is that if you're in a high-risk industry, make sure that you structure your business correctly. I recommend using a vague name that does not give away exactly what your business does. Something like ABC Solutions or Management or Enterprises. Number two is get a real business address. And so a virtual office can work fine, but just make sure that before you pay for anything that you look it up and you confirm that it's an actual office building and there's nothing on Google saying it's a virtual office. And number three, just make sure your business is properly registered. And so you want to have obviously your LLC, but have your EIN, your business phone number, your business email, etc. I'm telling you, these differences can be the difference between you getting $50K to $150,000 in funding or getting denied instantly. And the fifth most common mistake that I see business owners making is that they go apply for business funding without having an existing relationship with that bank first. And so banks don't like giving money to strangers. And so if you walk into any random bank that you've just never done business with before, 9 times out of 10, they'll either deny you or they'll give you much lower limit. But if you have an existing relationship with them, that's a whole different story. And so what's the solution to this? First thing is that before you apply for any type of business funding, open up a business checking account with that bank first. Number two is keep some money in there and also run some transactions through that bank. I mean, honestly, the more money that you can put in the account, the better. And when it comes to business funding, even just 3 to 6 months of history with that bank can make a huge difference when it comes to the approvals that you get. And now let's be real. Now that you know the 5 biggest mistakes that get business owners denied, you might be wondering, what if I already made some of those mistakes? Or what if I get denied and lose out on tens of thousands of dollars? Look, I've seen too many business owners miss out on funding simply because they just didn't know the right steps. And trust me, when banks say no, they don't tell you why. So now you got 2 options. You can either try to figure it out on your own, but that could take months or even years, and even just one wrong move can set you back even further. Or you can fast track your approvals and secure $50,000 to $150,000 in business funding by working with someone who's already helped business owners get funding the right way the first time. My team and I know exactly what banks look for, so you don't have to guess. And so if you're serious about getting $50,000 to $150,000 plus in business funding, watch this video next. It will answer all your questions and walk you through exactly what you need to do in order to secure funding in the fastest and easiest way. And do not wait, because every day without funding is a missed opportunity. But with that being said, my name is Jalil Nash, founder of JSM Funding Solutions, and I'll see you guys in the next video.